Another day, another dollar, baby. We've been calling this thing the whole time. If you've been watching my videos from the beginning, we've been talking about it from here. We talked about the leg up. We talked about the flush down. We said, don't worry, add, right? Because we're going back up. When we got back up, what did we say? Don't add anymore here because we're going to consolidate. We're going to start rolling over, and now look where we are. That's exactly what we're doing. Where's your add point now? Exactly like we talked about, this 50, because what's it probably going to do? It's probably going to converge with this trend line. And guess what that's going to be? A strong buy zone, right? As you have, guess what? Declining volume. What's happening? It's declining as we consolidate. And what is that setting up for? A big breakout move, ultimately, in the end. We knew it no matter where we looked. Energy fuels, NextGen, Cameco. I mean, this was so easy to see coming. And that's why we're prepared for it. And we have cash to take advantage. Advantage where? Well, we talked about that too, remember? So you want to watch, first of all, the 50 and the 200, all right? And this is why it's important. Even if you're only interested in Cameco and nothing else, you don't care about any other stock in the whole world than Cameco, guess what? You're still charting energy fuels. You're still charting NextGen. You're still charting URA and URNM and SPUT. I mean, SPUT, you're charting all of it, right? Because you have to find confluence in these lows and these potential bottoming moments. And the example of that is like, look, maybe Cameco starts rolling over, but for whatever reason in the industry, it's a little bit more bullish than the rest, okay? So maybe it only comes as far as it's 50. But let's say NextGen doesn't have as much going for it. Let's just talk, right? Maybe it comes down to its 200, okay? And then you have energy fuels. Well, maybe energy fuels falls all the way down here, right? To this lower, the lower trend of the channel, okay? And that's what you're looking for. Because none of these things are going to fall the exact same percentage. They're all going to fall at different rates. But what they will likely do is bottom out on key support at the same time. That is almost certain, which is why you need to chart the sector broadly to find that confluence of a low, find that confluence of a buy. Because when you do that, very rarely will you get it wrong. I don't care if it's gold stocks, silver stocks. I don't care. All right. You find that confluence in the sector, and then it gives you the knowledge to strike whatever you think is hot. And it's the same thing across the board. Same thing across the board. Even up here, I told you what would happen in gold. I said, look, we're going to roll over and we're going to consolidate. How? Well, we're going to put the handle on this cup, which is really the handle of this cup. It's like the inception of cup and handles. You have a cup and handle within a cup and handle within a cup and handle. All right. So this baby is likely going to ride the 50, if not the 200 on the lower bounds. Some kind of flush down move. That's fine. Anomalies happen. Get ready to buy if that does happen. All right. You're probably just going to be consolidating sideways until we break up. It'd be nice to see, again, maybe some slowly declining volume until you get that breakout on the big move up. Because believe me, this baby's going to bust. And if you haven't watched my prior videos, I gave you this entire setup, okay? This whole setup of how all these commodities across the board are setting up the same way in the charts. Because even though gold might be in this big cup and handle, other things are putting in flags, okay? They're putting in either their own handle on their own cup and handle, or they're putting in flags on their flagpoles because they're all breaking out kind of the same way. Let me show you what I'm talking about. Just look at nickel. Nickel's right here. Boom, you had this big breakup. Everybody's kind of familiar with what's going on in the nickel market, right? And this was kind of an anomaly on a short squeeze, but look what it's doing, all right? Look what it's doing. What do you think that is? I mean, what do you think that is? Look at uranium, okay? Look what this is. Look what it's doing, right? We just looked at that, right? What's it doing? It's just doing the same thing. Doing the same thing, all right? Oil, what's oil doing? What's oil doing? It's the same thing, right? Break up, now you're consolidating. You're in this kind of a wedge, this pennant, right? On this huge move. What do you think is going on, guys? All of these commodities are starting to trade in synchronicity with each other. Some loosely, but ever more so tightly, okay? And I think this consolidation phase is coinciding with the broad market playing chicken with the Fed, playing chicken over these yields, all right? Because the bond market's breaking, and the bond market is already pricing in reduced rates in 2023, right? So in other words, the bond market is already pricing in the Fed rolling over and lowering interest rates in 2023. All right. And so they're already, the market, excuse me, is already trying to make moves based on something that hasn't even happened yet because they're playing chicken with the Fed. You understand? This is not going to end well. Okay. I think the unexpected event to happen is that Jerome Powell maybe ends up going full Volcker, right? I mean, maybe he ends up letting interest rates rise high enough to matter. And this is going to sink all this crap. It's going to sink it all. But one way or another, the narrative right now is exactly, it's co-aligning with what's happening in commodities, okay? So you're getting some relief, this kind of a dead cat bounce, this relief rally and the broad indices while commodities consolidate. Because guess what happens next? I mean, these things are going to roll over, right? They're going to roll over, and then commodities will be done consolidating, and they're going to go up. I mean, that's just what's going to happen. So if you're already in, just hold tight because there's no reason to fear some massive end of the world kind of scenario in commodities, okay? If anything, you're looking at what might be your final opportunity to add or buy for the next leg up, likely a leg that's never, ever, ever going to come back. And I feel obligated to do this, guys. I got to talk about Centrus Energy again, LEU. Nobody loved it more than me, but I told you to get out. Now look what we've done. Solid H pattern. What do you think happens next, guys? Bloop. I tried to tell you, man, don't even mess with this company until something changes. Do not touch this company until good news comes out. So I am excited to see Vital Metals come up on big volume today, hit this upper trend line, did not break it, but it does look good. Now, if you see the past action, we hit this upper trend line and we like to bounce off kind of hard, right? It just kind of rolls over. But you can also see how if it doesn't bounce too hard, we can kind of roll, get something like this, and maybe we get a convergence of all three trend lines at the same time. What a buy that would be. I'm a taker. Commerce Resources, not necessarily breaking out or doing anything big, but it did get this huge gap open that is maintained above the 200. I think you watch this one too. If you can come down here and touch this either of these moving averages, I think it might be worth going ahead and getting in. I'm not so sure that we roll back down here anymore. And again, with Arianne Phosphate, nothing has changed here. Still looks good long term. I think this is still a buy. It's all about when you get in. If you're not in, you're just being patient, okay? That's all you're doing. Try to get in at least at the 50 or the 200. The lower trend line would be best. I'm a buyer at all three. You can scale in. Of course, if we get a breakup on volume, you can chase. But until then, you just wait for the price to come down. I had a flash update yesterday on Bitcoin and crypto broadly. Was this a buy zone? Was this a buy signal to get back in? We talked about this neckline. If you break it on volume, well, it's breaking the neckline, but I'm not sure the volume is there. We do have 4 hours left on the day, and in crypto, I mean, an hour bar could put you up here, right? That's just how it works. But until you see that, I still don't think you have the signal yet. I still don't think there's any reason to chase. In fact, unless this really starts to scale up, I'm willing to bet that it does roll over. However, if you are bullish, rolling over and retesting, at least this trend line could be very bullish. So it's worth watching for sure if you're looking to get in or add, but you technically don't have the signal yet. United States Steel, still just as bullish as ever, looking as good as ever. We talked about this when it first peekabooed. We said, let's wait until we get the touchdown, the retest. We got it, and we've been in ever since. Up 32% so far, as high as 37. Easy trade, man, and still really has no reason to come down. Not anytime soon anyway.